It is Tuesday, the 17th of December. This is the Morning Blast with myself, Ryan, and Mr. Michael Brown. Where he is, I do not know. Hello, Zoltan. Hello, Cam. Hello, Chris. Let's wait for the old boy to hobble over. I do hope he's okay. Oh, there he is. Okay, Michael. Okay, wait up. Hold up. All right, send invite. There you go. I've done that. I should have sent it. I believe I've sent it. Have you received an invite?
Good morning, everyone.
Oh, morning. You have received. That's weird. I didn't get a message saying that I even sent it, so I nearly tried sending it again. Let me quickly do the legals,
no
old
need.
boy.
I'm here and plugged in and ready and raring to go.
Perfect. Strapped on, strapped in. Nothing discussed on this space session constitutes trading or investment advice or infers any kind of endorsement by PIQ Global Limited, trainers PIQ or PIQ Suite, or indeed the hosts, which, as you know by now, is Mr. Michael Brown, way, and myself, Mr. Ryan Paisley, way.
Excuse me.
I'm slowly going insane. Anyway, well, not slowly. It's been a rapid one, and now it's just a slow grind for the last 10%. But yeah, 90% done on the insanity.
Yeah, the year is effectively almost very, very nearly
Oh,
over,
very
isn't it?
close.
I think we're all going a bit mental at
The
this point.
IQ Christmas party signifies the end of the year for me.
And rightly so.
And rightly so. Right. So what's been happening, old bean?
Indeed, yes. Let's crack on. Good morning, everybody. It was a relatively subdued start to the week for financial markets yesterday, as is so often the case when you've got a big week of event risk looming large. The week started in relatively subdued fashion for most asset classes, although we did see some notable strength coming through in the tech sector yesterday, with the Nasdaq closing up by around 1.5%, notching a fresh record high. The S&P ending the day about 0.4% higher. That volatility, though, was not in evidence elsewhere. Treasuries ending the day pretty much exactly where we began. The same can be said of the G10FX space as well, which was a choppy day for most majors, with the dollar stuck around and marginally below the 107 figure for the majority of the day, and most major peers also doing little more than tread water. We did, though, see sterling unwind some of the weakness that was on display on Friday, with cable trading as much as 0.5% firmer yesterday, although we couldn't make our way north of 127. We also saw the yen continuing to soften as dollar yen rose north of the 154 handle and continues to trade north of that figure this morning. And that is, of course, as expectations grow. That the Bank of Japan will indeed keep policy on hold at their meeting in the early hours of Thursday morning. Gold also going nowhere particularly quickly, while we saw some modest downside in crude, with WTI falling around about 1% on the day, and WTI trading another 1% softer this morning. Started to barrel lower actually in the last half an hour or so, in what is actually quite a slick move.
Oh no!
Below $70 a barrel now. In terms of catalysts from yesterday, of course, it was flash PMI day. In the Eurozone, the manufacturing sector continuing to contract at a relatively rapid pace, the PMI reading 45.2 in December, but the services sector is back into expansion, with the PMI printing at 51.4 above the prior and the consensus of 49.5, and also that's a 2-month high on the services gauge. Here in the UK, we also saw with the manufacturing contraction deepening as the PMI fell to an 11-month low of 47.3, while in the services sector we saw the index rise to 51.4 from a prior 50.8. So again, a 2-month high on the services gauge here in the UK. In terms of news flow from yesterday, quite a lot to digest from a political perspective. Firstly, in Europe, the German Parliament, they passed the motion of no confidence in Chancellor Olaf Scholz. This was very much a formality and very much in line with market expectations. It does, of course, pave the way for the German president to dissolve the Bundestag and clears the way for elections in February. Olaf Scholz was also saying yesterday that, I quote quote here: Germany needs more economic growth. Talk about stating the bleeding obvious. Meanwhile, here in the UK, the Chancellor, Rachel Reeves.
Can I just interrupt? Because
Oh,
there
go on.
was some comments out from German policymakers yesterday. It actually might have even been Schultz himself. I can't remember. Apologies. Saying that they need to kind of it basically was the effect of, this come to accept that Bitcoin is a thing, and Germany should embrace the power of Bitcoin, or whatever it was, or like words to that effect, which is a bit ironic considering that 6 months ago, whenever it was, Germany sold pretty much all of their Bitcoins that they had confiscated over the years for about, I think someone said about an average of 50,000, whatever. I'm sure Cam will correct me in the replies. But yeah, it seems like clutching at straws, whatever the German for that is.
Well, I don't speak German, but I can guarantee that it'd be a very long word, probably almost as long as you are tall. Moving
That's a
on,
short word.
here in the... Well, yeah, for you it probably is, actually. Moving on, here in the UK,
Hang on, I've just
we
snagged
heard from
myself
the
off.
Chancellor.
Fuck.
Yeah, I know. I don't know what you're up to there.
Sorry.
We heard from the Chancellor, Rachel Reeves, yesterday. She is going to make a parliamentary statement on the 26th of March. She has also asked the OBR to prepare an economic and fiscal forecast for that date, while reiterating her vow or promise to deliver one major fiscal event a year. The cynic in me thinks that this timing is actually quite clever. Because obviously it comes about 6 months after the budget that we had in the autumn. But if we are going to be doing this one fiscal event a year thing, Rachel Reeves is probably going to want to get that fiscal event in the diary before we start to see the full impact of those national insurance changes, which obviously take effect at the start of April, at the start of the new tax year. So I think actually what Reeves is trying to do is, given that the economic outlook appears to be souring, is actually wanting to get that fiscal event done sooner
Because
rather
it's going
than
to get a lot
later,
fucking worse.
so that exactly, so that the OBR's forecasts are prepared on a baseline that is perhaps not quite as bad as things are going to get. Of course, that is as a date for the diary, and you would expect a significant number of leaks to emerge as we move forwards closer to that event. The last thing I would say, just very quickly on that, is, of course, the amount of fiscal headroom that we have here in the
Lack
UK
of.
is still pretty limited, at about, quite at about £16 billion. So the room to manoeuvre for Reeves is basically non-existent.
Just on, as we're talking about the Labour government, obviously for those who might not be aware, it's a bit of some anti-democratic kind of positioning yesterday, wasn't there, with the councils?
Oh, yes.
Do you want to say a quick word on that?
Well, yeah. So for those who don't live in the UK, we were supposed to be having local elections next year in May 2025. The government are also looking to change the way that local administration takes place in the UK, which basically, to cut a very long story short, rather than having relatively small sort of town councils that look after a few tens of thousands of people, they want to have much larger unitary councils which look after a minimum of 500,000 people. What the government have said, or what they're rumoured to be looking at doing, is rather than conducting those elections in 2025 to the smaller town councils, is actually saying we're just going to scrap those elections altogether because we're changing the system of local government anyway, so let's just leave it as it is for a couple of years until we've made those changes. Now, of course, this has nothing whatsoever to do with the fact that the government are going to take an absolute beating at the ballot box the next time an election is held.
And also the thing that really gets here is the fact that they're only looking to delay, was it 20 odd councils?
Yes,
and
that's
these
right.
turns out, very likely to be 20 of the most important that Labour are doing really, really bad in. It stinks to high heaven, let's be honest.
It does. I would not be at all surprised if they don't get away with it.
Well, you'd hope so.
But
I know
only time will tell on that front.
Not that I hope it doesn't get that far, because if it does, I can't see him doing anything. But there is some clause, probably goes back to the Magna Carta or some bollocks like that. But the king can actually say, no, you must have elections. If there's not kind of clear reason to not do so. But it'd be an interesting one to see, and I'm very much looking forward to what our dear friend Helen Thomas has to say on this.
Yes, that will be very
Good morning, the
interesting.
Good Money Guide, who's just joined us. Shout out to them.
Right. Good morning, Mr. Richard Berry. Moving away from the UK, sticking with politics, and over to Canada.
Oh yeah.
They are trying to outdo. They're trying to outdo the UK actually in terms of political
Can we just have
shambles.
some political normalcy,
The
please, from someone?
Well, quite. So, just to set the stage with what's going on in Canada at the moment, the finance minister in Canada has to deliver something called a fall economic statement. Of course, fall being autumn for those of us on this side of the Atlantic. And Chrystia Freeland, who was finance minister, was scheduled to be delivering this yesterday. Now, I don't know by whose definition the 16th of December is autumn, but I think that's the least of the worries at this point. What actually happened was yesterday morning, Chrystia Freeland decided to resign with what is actually, and I would advise you go and read it, a very, very scathing resignation letter, effectively slagging off everything that Prime Minister Justin Trudeau has come up with. This then sparked a whole round of upheaval. I think there are another couple of cabinet resignations as well. The end result of this was that Trudeau named a chap called Dominic LeBlanc as the new finance minister, but there have been plenty of reports, and we all know, to be completely honest with you, this is true, that Justin Trudeau is continuing to rather aggressively court a certain Mark Carney to come and take over the post, of course, of
What's your
BOC Governor
feelings on this,
fame.
Mr. Brown?
Well, thank God he's in Canada and not the UK. Let's leave it at that. The other couple of things that are worth noting from Canada is, firstly, this fall economic statement that the new chap then got the job of, well, effectively reading out. It wouldn't be his own statement. He didn't have enough time to produce it. Showed that the budget deficit is actually at 60 billion Canadian dollars as opposed to the projected 40 billion. So clearly, some degree of fiscal tightening is going to be needed in Canada. We also now have the Liberal Party, who are the ruling party in Canada, their coalition partners are calling for Trudeau's resignation, basically saying that things are a complete shambles and effectively ungovernable. Canada does have parliamentary elections scheduled for next October. I think the chances of the government riding this out and actually getting to next October are pretty damn
Well,
slim
on that,
at this
just
moment in
whilst we're
time.
talking about that, then, so just I'm looking at some poly market odds now on Trudeau resigning. So the market currently pricing a 23% chance Trudeau resigns by Friday, and Trudeau out before April was at 68%. So one to watch. There's actually
Yes,
a
indeed, one
market
to
for
watch
a
there.
Canadian election called before April, and that's currently trading at 70% as well.
Yeah, so that's certainly one to watch. The Canadian dollar did briefly spike to fresh 4.5 year lows on the resignation
Loony.
headlines, but did recover some of that ground as the rest of the day progressed. But certainly one to keep an eye on. And also, it's important to keep an eye on it because, well, firstly, the Liberals are likely to lose given the current opinion polling. And secondly, if Trump is going to start slapping 25% tariffs on Canadian imports, then you probably want a functioning
Well,
government in order to be able to
a
respond
great
to
thing
that.
for me just to jump in here as well, sorry for save me just coming back to it later on, is the government, well, what's left of it, yesterday proposed a Canadian dollar 1.3 billion with a B, which equates to $913 million for border security after President-elect Trump threatened tariffs unless Canada reduced the movement of migrants and drugs into the US. So again, like we've seen with Mexico, this threat of big tariffs from the off is kind of lit a fire, and all of a sudden some money's become available to plug some gaps. So we are seeing some movements on that.
Indeed. Yeah, funny how that works, isn't
Yeah.
it? Away from
Away.
the political side of things, just a few bits and bobs worth covering off. We did hear from 5 ECB speakers yesterday, all of whom really just stuck to the script, reiterating that the direction of travel in terms of rates is lower, that more cuts are on the way, and that the speed of those cuts depends on incoming economic data. It was interesting, though, just to hear from the Spanish central bank governor, Escriva. Of course, Spain is probably the only success story in Europe at the moment. He actually said that risks to inflation are more tilted to the upside than to the downside, which I think is a notable divergence from what Lagarde has been saying around those risks being more two-sided. And just lastly, a couple of things from China. This saga around TikTok is continuing. They're now going to the Supreme Court to try and stop their business being banned in the United States from the 19th of January. And also from China, we had news via Reuters this morning that they are going to target GDP growth of around 5% in 2025. And you can forget your poly market odds. Mike Brown odds is that there is a 100% chance that they hit that target, because it's very easy to do so when you just make the numbers. And that is pretty much it from me for
cynic,
now.
you. Well, thank you for that, Mr. Brown. Just quickly, before I go into some headlines from Zach, just a quick one from our dear friends at News Squawk, as it's just hit the News Squawk feed on the PIQ platform, is the Barclays month quarter end rebalancing. Some of the headlines from that's come out, and at the moment it's USD neutral. So as you were, buy your beds, etc., etc. So starting off in China, though, from our headlines from dear old Zach. Hello, Zach. Chinese premier has urged the government officials to swiftly carry out key economic tasks for the coming year after top leaders signaled stronger stimulus for 2025. And perhaps they're listening in and getting annoyed that I keep saying they're all fart no poo. China's capital markets witnessed a record outflow of nearly $46 billion in November, according to official data tracking cross-border investments in stocks and bonds. Moving to, further afield, so basically America and Europe, the conference board survey of mainly American and European CEOs showed confidence in China signaled pessimism for the first time since the pandemic, even after the nation unleashed a raft of stimulus measures. Moving to the US, the Fed whisperer, Wall Street Journal's Tim Reyes, is quoted saying the recent Fed communication has suggested officials will deliver much more cautious tone about further cuts in the quarterly rate projections, and comments from Fed Chair Jerome Powell at a news conference on Wednesday. Pretty much exactly what we've been saying will happen. It will be all about the statement, and expect quite a statement with a lot of uncertain tones. In the UK, briefly, UK average weekly earnings, excluding bonuses, were 5.2% higher.
Whoa! You're straying onto my turf now.
All right, I'm off. I'll cancel that. Right, done. Right, top brass from companies including Rolls-Royce and Prudential and Legal & General will advise Prime Minister Keir Starmer's UK government as it devises a new industrial strategy to drive growth. Now, if this comes to be, and he does actually take advice from the main industrial powerhouses of the UK, that is a very good thing to do. It'll be,
I'd be amazed if he did.
Well, I'll wait and see what happens, because especially Rolls-Royce, right? Because Rolls-Royce just absolutely all over it at the moment, and these small medium reactors and all stuff like that, they're doing some great things, and it seems to be them building them over here, but it's not, the UK ain't using them. So it'll be interesting to see what comes out of this. More of that, please. Quickly, in Japan, over 90% of market participants expect Bank of Japan to keep interest rates steady at this week's policy meeting. A survey for money market brokerage by money market brokerage Ueda Yagi Tansy, there you go, showed 95% expect a hike.
Sorry, I didn't quite catch the name of that.
Yeah, moving on. 95% expect a hike 3 months from now. I'll be honest, I do not see a hike 3 months from now. I'll be shocked if we get a hike 3 months from now, so I'll take the other side of that bet, please. Just some equity news. Tesla's Musk met with TSMC chairman, I ain't saying his name, in the US last week to discuss production capacity for Dojo AI chips for humanoid robots made by TSMC's 5-nanometer process, I believe, maybe. Wei assured Musk that his fears over chip supply were unwarranted as long as Tesla can pay for them. Yeah, but that sounds fair enough. Elon Musk, charged with cracking down on waste across the US federal government, has recently signaled out a particular target, and that's the Pentagon's costly fleet of F-35 fighter jets. He has been posting quite a bit on how drones could be doing most of that work, so interesting to see what comes up there. One for defense names, possibly. Alphabet's Waymo announced entry into Japan. It's the first new market outside of the US. One to keep an eye on. eBay shares rose in after-hours trade after it announced an additional $3 billion buyback. All hell the buybacks. One for Tom. Is Tom listening in? Oh, he's dropped off. Oh, this is the only
Of
reason.
course, he's not. It's too early for
Well, I
him.
did see him just now, but it's the only reason I'm saying it because I can't understand. Right, I'm about to say some words, no idea what they mean. So put them together yourself, all right? It's the IKEA of news headlines. Nvidia's thermal issues with the AOS 5x5 DRMOS chips for the GB300B300 system could prompt the shift from Nvidia to use MPS's higher cost 5x6 DRMOS instead to avoid delays, impacting AOS's near-term order book. I ain't got a fucking clue what that means.
Right.
It sounds like they found a workaround for something that was going to cost them a bit of time and therefore money. So I'm presume this is good news, but answers on a postcard, please. Alibaba, don't make any jokes, Ryan. It's set to book it's set to book over $1 billion of losses on the sale of its department store chain In Time, which marks the Chinese tech giant's latest move away from offline retailing. So perhaps this is a death of the high street kind of story, but in Chinese. And finally, from me, and I can hear you breathing all a sigh of relief, the world's top miners, BHP and Rio Tinto, will join BlueScope Steel Limited to build Australia's largest electric iron making furnace, a move they say may speed up decarbonisation of steel production. And back to you in the studio.
Very good. Thank you, Ryan.
Thank you.
He does need to be put back in his box sometimes. It's a very small box, but
Who,
nonetheless.
me?
Yes.
Okay.
In terms of today, then, you already know about the UK employment data that we had out this morning. Unemployment holding steady at 4.3% in the 3 months to October, while both regular pay and pay including bonuses rose by 5.2% on an annual basis over the same period. There are a couple of one-off factors that are likely influencing the earnings metrics, including a very unfavourable base effect from 2023, as well as, of course, the start of those summer above inflation public sector pay increases starting to come into the data. Nevertheless, this has pretty much killed, stone dead, the chance of any BOE action on Thursday. Let's be honest, we already knew they were going to hold bank rates steady, but markets have now priced out the very modest 3% chance that we had of a cut for that meeting. We've also seen a hawkish repricing further out the curve as well, with money markets now assigning just a 2 in 3 chance of a February rate cut, and that was as much as an 80% chance at the close yesterday, while participants also see a less than even chance of 3 25 basis point cuts next year, whereas yesterday those 3 cuts were fully priced. Of course, we do have the latest UK inflation figures due tomorrow morning, and then we have the BOE decision itself on Thursday lunchtime. Moving ahead then to the rest of today. This morning is dominated by sentiment surveys out of Germany. In about 8 minutes' time, we have the latest data from the IFO Institute, their business climate metric. That's expected to slip to 85.5 from a prior 85.7. And in more news that will please Ryan, at 10, we have similar figures from this time from the ZEW Institute, where their expectations metric, that's seen falling to 6.9 from a prior 7.4. Moving into the US session, the highlight of today is the US retail sales print. This data, of course, for November. Headline sales, they're seen rising by 0.6% on the month, up from the prior 0.4% increase, while the control group metric, which is broadly representative of the basket of goods that feeds into the GDP release, that's seen rising by 0.4% compared to the 0.1% decline that we saw in October. Also due at 1:30, we have the latest inflation figures from Canada. Headline CPI expected to have held steady at 2% on an annual basis for the second month running. Into the remainder of the US session, a couple of things worth noting. The first is the US industrial production figures. Production seen rising by 0.3% on the month in November compared to the 0.3% decline that we saw in October. We also have US supply today. A 20-year auction is at 6 o'clock this evening. And then in terms of central bank speakers, of course, the Fed are still in their pre-meeting blackout period, but we are due to hear from the ECB's Casimir and Wren as we move through the morning session. And that is pretty much your lot for today.
Excellent. Excellent. Thank you, Mr. Brown. Big shout out to our friend Zishi as well. Check them out. I can see, yes, Suzanne listening over there. So that's one for that. But yeah, thank you very much, Mr. Brown. I might be around later on, actually, if you're about, for potentially a quick, swift half. But I'll let you know on the other communication channels. Guys, thank you.
Drop me a line.
Yeah, I will do. I've got to get you back for the shoebox joke. Anyway.
Shoebox a bit big.
Oh, wow. Matchbox. Anyway, we digress. Right, listeners, thank you so much for listening. As always, Mr. Michael Brown, thank you as always for being an incredible host and font of knowledge and for putting up with me. And we will see you all tomorrow. See you later. Bye-bye.
Bye-bye.